Good evening, and welcome to the Crypto Overnighter. I'm Nikodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Wednesday, April 12th, 2023. And let's start off with our cover story for tonight. A report funded by the European Commission calls for stricter identity checks for crypto exchange users. Regulators are looking for ways to stop the use of darknet marketplaces to buy illegal drugs. This report comes from the European Monitoring Center for Drugs and Drug Addiction. Lawmakers in the EU are working to make anti-money laundering checks stronger for cryptocurrency transactions, because the report suggests that better training for police could work better than banning crypto altogether. Now, the report says it's important for countries to follow the recommendations laid out by the Financial Action Task Force. They want people who cash out illegal profits to be identified. The report was written by Kim Grauer and Eric Jardine of Chainalysis. Now, Chainalysis is a platform that does blockchain research and provides analytics solutions for regulators. Millions of dollars in contracts with the U.S. government. Now, according to this report, banning cryptocurrency doesn't stop the darknet activity. Duh. Even when law enforcement shuts down marketplaces like Hydra in 2022, it doesn't last long. Other alternatives end up taking their place. Even so, investigators can improve their response to this issue. The report suggests that law enforcement needs training on the technologies and investigative techniques used in these cases. Skills such as seizing and tracing crypto and using encrypted platforms are especially important. Next week, EU lawmakers will vote on new licensing rules for the crypto industry. These rules would require identity checks for users who transfer funds. Now, the European Parliament also wants to set limits on anonymous transactions too. This is part of a bigger effort to stop money laundering, or so they say. Now, if you just spare me a couple of minutes here, I'm going to ask you to like, follow, and subscribe to the Crypto Overnighter. It plays a huge role in helping new people find their way here, so thank you. Japan's senior financial diplomat is Masato Kanda, and he said that the G7 nations will prioritize helping developing countries introduce their central bank digital currencies. In a seminar held in Washington, D.C., Kanda pointed out that the digital technologies have many benefits, including cheaper and faster cross-border payments. However, new technologies bring new challenges and risks. Kanda also emphasized the importance of appropriate transparency and sound governance to manage those risks. This year's G7 summit will be held in Hiroshima. Discussions regarding crypto regulations are expected to be a priority. In mid-May, finance ministers and central bankers from the G7 countries will meet to discuss tougher global crypto regulations. The focus will be on increasing business transparency and consumer protection. Kanda emphasized the need for consistent regulation across borders. He pointed to the collapse of FTX as a serious wake-up call. Kanda also stressed the importance of finalizing the Financial Stability Board's work on developing high-level recommendations for crypto asset activities and global stablecoin arrangements. The effective implementation of these recommendations is crucial. FTX Japan customers were among the first to receive their money back from the collapsed crypto exchange, reportedly due to Japan's strict crypto regulations. The group of 20 major economies has asked the Financial Stability Board and the International Monetary Fund to produce a synthesis paper on global crypto rules by September or October. The paper will represent a joint effort between the two organizations. Now, from one island to another, let's take a look at Hong Kong. On Wednesday, a Hong Kong regulator named Keith Choi said that decentralized finance projects may need licensing requirements and regulation. Choi is the interim head of intermediaries at Hong Kong's Securities and Futures Commission. He explained that if DeFi activity falls within the Securities and Futures Ordinance, then it will have to follow the same regulatory requirements as traditional financial activity. During a speech at the Web3 Festival in Hong Kong, Choi spoke about the need for regulation in decentralized finance projects. The United States and France had also recently released reports on DeFi regulation. According to Choi, offering automated trading services is a regulated activity under the Securities and Futures Ordinance. So, if a decentralized platform permits trading in virtual assets that are considered securities or futures as per the ordinance, then the platform and its operators must possess a Type 7 license. Choi also said that offering a collective investment scheme to the public in Hong Kong requires authorization. DeFi poses problems for regulators because of financial stability and a lack of transparency. These are due to unregulated firms and activities, as well as data limitations. Additionally, Choi mentioned concerns around market integrity, such as price oracle manipulation, front-running transactions, and investor protection. In December of 2022, the Securities and Futures Commission of Hong Kong released a statement that warned investors of the potential dangers associated with virtual asset platforms. A new licensing regime for virtual asset trading platforms in Hong Kong will become effective in June of 2023, but there is a grandfathering period in place. Now, let's stick with Hong Kong for a bit now, because the biggest virtual bank in Hong Kong by assets is ZA Bank. And ZA Bank plans to provide crypto account services and to help exchange cryptocurrency to fiat currency. The bank will be a settlement bank, which means it will allow token deposits to be withdrawn in different currencies, like Hong Kong dollars, Chinese yuan, and United States dollars. It will also offer account services to crypto companies, something that seems to be in short supply these days. Local crypto firms can now have accounts with ZA Bank. This follows a trial in a regulatory sandbox where around 100 firms took part. But CEO Ronald Yu said that customers from mainland China will not be allowed to use the service. Predictable. Currently, only 2 licensed crypto exchanges in Hong Kong, Hashkey and OSL, offer currency conversions. As exchanges become licensed, ZA Bank will offer the same service. Crypto firms in the United States are having difficulty finding banking partners after Silicon Valley Bank, Silvergate Bank, and Signature Bank all imploded at the same time. All were friendly to crypto, which leaves quite a gap. ZA Bank, based in Hong Kong, could be a solution for these firms. Hong Kong regulators have been making a push to turn the region into a crypto hub. The announcement from ZA Bank is part of that effort. The crypto community believes that Hong Kong's approach is better than the hostility from US regulators, and I would have to agree with that. Chinese state-owned banks have also shown interest in the crypto firms moving to the city. They are either offering banking services to crypto firms or asking about them. So now let's play catch up with FTX, shall we? Let's start off with Ren Protocol. They are a cross-chain bridge platform, or maybe were is the more appropriate verb to be used here, because Ren has been directed by FTX, Alameda Research, and other affiliates to move all of its crypto assets to FTX debtors' wallets. The purpose of the move is to safeguard the assets of debtors in the case of their systems and infrastructures shut down. Ren also plans to transfer the assets to a segregated wallet designated for Ren's assets to separate them from other debtor wallets. I understand the concept of separating money is relatively new over at FTX. It's a little late, fellas. Ren joined with Alameda Research on February 2nd, 2022 to advance interoperability in DeFi. CEO Taiyang Zhang said the acquisition would speed up the decentralization of Ren's technologies, especially with Alameda's resources supporting them. And we know what happened to FTX and Alameda Research, so let's just say Ren's plans went up in flames. In December 2022, when Alameda Research faced difficulties, Ren Protocol advised users to unwrap their tokens in the Ren 1 network. They suggested taking them back to the main chains because the network had to shut down due to Alameda's events. Community members had mixed reactions to the news of Ren's asset transfer. Some users on Twitter believed Ren was being legally rugged, while others were more skeptical. One user suggested that insiders were trying to short the Ren token. And I used to have a little bit of Ren back in the day. I dumped it some time ago, And maybe that was for the best. How about you? Are you holding Ren? Do you feel rugged? Let me know in the comments. And in other FTX-related news, they received approval from a Swiss court to look into selling their European business. FTX Europe is the holding company for FTX's European arm, and they asked for a Swiss moratorium proceeding. And the court granted it on Tuesday. Now, if you're not familiar with this kind of proceeding, it allows for debt restructuring or the preservation of assets for a specific period. Now, according to the announcement, FTX Europe said the moratorium process will allow for the exploration of strategic options. These are options that include a possible sale of the business using U.S. bankruptcy court approved bidding procedures. The former head of institutional sales for FTX thinks that they should relaunch. He suggests they offer a token that represents creditors' claims. Zane Tackett said on Telegram that he believes that even if the token's value is small, it would still be better than nothing for the creditors. He also thinks that if FTX tries and fails, it wouldn't make things much worse. Tackett suggested that FTX should be brought back to life. Additionally, he proposes a market where creditors can trade their claims on the bankrupt company. Tackett used Bitfinex as an example, a crypto exchange that offered a token called BFX after it was hacked in 2016. He thinks FTX could offer a similar market where one token represents $1 lost. Tackett explains that creditors don't have a fair way to price the assets held by FTX currently. He thinks that if they could convert the debt into equity and have exposure to FTX's investments, that would be beneficial. Tackett said that would provide immediate liquidity to those who want it and give those who want the opportunity for a bigger payoff the chance to do so. Now, Tackett isn't the only one suggesting bringing FTX back. John Ray III mentioned the idea back in January. FTX's creditors law firm had several meetings regarding a reboot of exchange. The company has examined the benefits and tax implications of restarting the exchange and created a mock-up to test user experience. Tackett acknowledges that there are several obstacles to the plan. First, some of the funds recovered for creditors would need to finance the reboot. If the relaunched exchange fails once again, it would reduce the amount that creditors receive. The success of the relaunch would depend on how it's done. When asked if users would return to FTX, Tackett said that it depends on whether it's well regulated and run in the US, but without the innovation of products that initially attracted users. He believes that FTX 2.0 can succeed if it's run like a crypto company and it's agile. Tackett is unsure if the current management is capable of that relaunch. The Mapa Rofex exchange in Argentina will launch a Bitcoin-based futures index in May. That makes it the first regulated Bitcoin futures indexed in Latin America. The country's securities regulator, the National Commission of Value, approved the index as part of a strategic innovation agenda. The agenda was launched in the first quarter of last year to encourage public-private collaboration in creating new and innovative products in the capital market. The Bitcoin futures contract on the exchange will rely on the price of Bitcoin from the different entities that offer Bitcoin Argentine peso trading pairs. All trades will be settled in Argentine pesos, and traders must deposit the currency through bank transfer. To offer the Bitcoin futures contracts, exchanges must have a valid contract with a payment services provider. This provider needs to be registered with the Central Bank of the Argentine Republic. The payment services are a necessity for conducting transactions within the country. Qualified investors will have a secure and regulated way to invest in Bitcoin through this new futures index. The National Commission of Value has asked the exchange to include alerts that inform investors of the potential risks of the financial instruments. Argentina has been experiencing high inflation. This has led many citizens to seek refuge in Bitcoin. As a result, the country's peer-to-peer Bitcoin trading volume has reached record highs due to the impact of inflation. The Ministry of Economy proposed a bill that encouraged citizens to declare their crypto assets and offered tax benefits. Argentina has been pro-crypto, with adoption rates nearly double those of neighboring countries. Binance recently announced its expansion into Argentina, just 1 week before the launch of the Bitcoin futures contract. The approval of the futures contract was confirmed by the Binance CEO, CZ. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating or a review. And in the meantime, we'll see you tomorrow night.